In this video, we'll break down 3 green energy stocks that billionaires are quietly loading right now with upside potential that could reach as high as 65% as the next energy cycle begins. You're about to discover why these companies are not just part of the clean energy trend, but positioned at the center of a massive global shift toward electrification, energy security, and AI-driven power demand. We are talking about businesses building the backbone of the future energy economy. Companies with scalable technology, long-term contracts, and the kind of structural demand that can compound for years. The first company is one of the most controversial and misunderstood plays in all of green energy. We're talking about Oklo, ticker symbol OKLO. At first glance, Oklo does not look like a traditional renewable energy company. It is not solar, it is not wind, it is something far more powerful and far more disruptive. Oklo is focused on advanced nuclear energy. Now, before you tune out because of the word nuclear, this is exactly where the opportunity begins. Because the biggest problem facing the global energy transition right now is not generation capacity, it is reliability. Solar and wind are growing fast, but they are intermittent, they depend on weather conditions, they require storage solutions, and they cannot provide consistent baseload power on their own. This is where nuclear becomes critical. It offers continuous, carbon-free energy that can run 24 hours a day, 7 days a week. And Oklo is not building traditional nuclear reactors. It is developing small modular reactors designed to be more efficient, more flexible, and faster to deploy. This is a completely different approach to nuclear energy. Instead of massive, expensive plants that take years to build, Oklo is focused on compact systems that can be deployed closer to where energy is actually needed. Think data centers, think industrial facilities, think remote regions that need reliable power. Now connect this to one of the biggest trends in the market right now. Artificial intelligence. AI is driving an explosion in electricity demand. Data centers are consuming more power than ever before. And as AI adoption accelerates, that demand is only going to increase. The world is going to need massive amounts of reliable, carbon-free energy to support this growth. And that is exactly the problem Oklo is trying to solve. This is why interest in advanced nuclear is starting to surge again. Not because it is new, but because it is necessary. Now let's talk about why investors are paying attention. Oklo is still in the early stages. This is not a mature, cash-generating utility. It is a growth-stage company with significant upside potential, but also higher risk. What makes it compelling is the scale of the opportunity. The company is targeting long-term power agreements with customers who need reliable energy for decades. These are not short-term contracts. These are multi-year, potentially multi-decade revenue streams. That creates visibility. And in a market where energy demand is becoming more predictable and more critical, that kind of visibility can be extremely valuable. There is also a strong alignment with government policy. Energy security is becoming a top priority. Countries want to reduce dependence on unstable supply chains and ensure they have reliable domestic energy sources. Advanced nuclear fits directly into that narrative. Now let's look at the growth angle. Oklo is positioning itself as a first mover in a category that could expand rapidly over the next decade. If small modular reactors gain widespread adoption, the total addressable market could be enormous. And early players in emerging industries often capture outsized returns. This is where the potential 65% upside comes into play. Investors are not just valuing what Oklo is today, they are looking at what it could become if execution aligns with demand. But here is where you need to be clear. This is not a low-risk investment. There are regulatory hurdles, there are execution challenges, there is uncertainty around timelines. But those risks are also what create the opportunity. Because while the market debates the risks, long-term investors are positioning for the potential. And that is often how big returns are generated, by stepping into uncertainty when the long-term trend is clear. Now think about how this fits into a broader portfolio. Oklo is not your stable dividend-paying energy stock. It is your asymmetric bet. A company that could deliver significant returns if the thesis plays out, but also requires patience and conviction. This is the type of stock that billionaires often allocate a portion of their capital toward. Not because it is guaranteed, but because the upside relative to the risk can be compelling. And when you look at the convergence of AI-driven energy demand, global decarbonization efforts, and the need for reliable baseload power, Oklo sits right at the intersection. That is a powerful place to be. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now let's move to the second company. And this is where the story shifts from future potential to real-world deployment happening right now. We're talking about Bloom Energy, ticker symbol BE. If 𝗗𝗧 represents the future of baseload power, Bloom Energy represents the present solution to one of the biggest bottlenecks in the energy transition: reliable, on-demand electricity. Because here is the reality most people underestimate. The grid is under pressure. Electricity demand is rising rapidly, driven by AI data centers, electrification of transportation, and industrial expansion. At the same time, aging infrastructure and intermittent renewable sources are creating instability. Companies cannot afford downtime, data centers cannot risk outages, industrial operations cannot pause because the grid is unreliable. This is where Bloom Energy steps in. The company builds solid oxide fuel cell systems that generate electricity on site. Instead of relying entirely on the grid, customers can produce their own power with high efficiency and lower emissions. This is a major shift. It moves energy from a centralized model to a distributed one, and that shift is accelerating. Bloom's technology allows businesses to secure reliable power exactly where they need it. This is especially valuable for energy-intensive operations like data centers, healthcare facilities, and manufacturing plants. Now connect this back to AI. Data centers are expanding at an incredible pace, and they require constant, uninterrupted power. Even a short disruption can have massive financial consequences. Bloom Energy provides a solution that is not just cleaner, but also more reliable. That combination is extremely powerful. Now let's talk about the business model. Bloom generates revenue through the sale of its fuel cell systems, as well as long-term service agreements. These service contracts create recurring revenue, which adds stability to the business. And as more systems are deployed, that recurring revenue base continues to grow. This is where operating leverage starts to build. As the installed base expands, margins can improve over time. Now let's look at the growth drivers. First, increasing demand for distributed energy. Companies are actively looking for ways to reduce dependence on the grid. Bloom's systems allow them to do exactly that. Second, the transition toward cleaner energy sources. Bloom's fuel cells can operate on natural gas today, but they are also capable of running on hydrogen. As hydrogen infrastructure develops, this positions Bloom to benefit from another major energy trend. Third, the rapid expansion of AI infrastructure. This is one of the most important catalysts. As more data centers come online, the need for reliable power solutions increases. Bloom is already working with customers in this space, which puts it in a strong position to capture future demand. Now let's talk about financial momentum. Bloom Energy has been showing strong revenue growth as adoption increases. The company has also been working to improve margins and move toward profitability. This is a critical phase. When a company transitions from growth at all costs to more efficient growth, the market often begins to re-rate the stock, and that re-rating can drive significant upside. Analysts see meaningful potential here, with upside projections contributing to the broader 65% opportunity across these green energy plays. But what makes Bloom particularly interesting is its positioning. It is not dependent on a single trend. It benefits from multiple tailwinds: grid instability, AI-driven power demand, hydrogen adoption, decentralization of energy. When a company sits at the intersection of several powerful trends, it increases the probability of sustained growth. Now let's address the risks. Bloom operates in a competitive and evolving industry. Technology adoption can take time, costs need to come down, and execution remains critical. There is also the question of scalability. Can the company continue to deploy systems at a pace that matches demand? Can it maintain quality and reliability as it grows? These are important factors to watch. But again, this is where the opportunity lies. The market is aware of these risks, and that is reflected in the valuation. If Bloom continues to execute and demand continues to rise, the upside could be substantial. Now think about how this fits alongside 𝗗𝗧. 𝗗𝗧 is targeting long-term baseload power with advanced nuclear. Bloom is solving immediate energy reliability challenges with distributed systems. Together they represent two different layers of the same problem. How do we generate enough clean, reliable energy to support a rapidly electrifying world? And both companies are positioned to benefit as that question becomes more urgent. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move to the third company, and this is where everything comes together at scale. We're talking about 𝗗𝗑𝗦𝗧, ticker symbol GEV. If 𝗗𝗧 represents the future of next-generation nuclear, and Bloom Energy represents decentralized power solutions, 𝗗𝗑𝗦𝗧 represents something even bigger: the backbone of global energy infrastructure. This is not a small, emerging player. This is a company operating at massive scale. with deep roots in power generation, grid technology, and renewable energy systems. And that scale matters. Because as the world transitions to cleaner energy, it is not just about new technology, it is about upgrading and expanding the entire energy system. That includes power plants, transmission networks, grid stability, and integration of renewable sources. 𝗗𝗓𝗏𝗧 sits right in the middle of that transformation. The company was formed as a dedicated energy business, combining traditional power with renewable and grid solutions. This gives it a unique position. It can participate in the energy transition from multiple angles at once. Now think about the magnitude of what is happening globally. Electricity demand is rising faster than most people realize. AI is driving massive power consumption through data centers. Electric vehicles are increasing demand on the grid. Industries are electrifying processes that were previously powered by fossil fuels. At the same time, countries are investing heavily in renewable energy to reduce emissions. All of this creates a complex challenge. How do you generate more power, integrate renewable sources, and maintain grid stability at the same time? That is where 𝗗𝗓𝗏𝗧 comes in. The company provides the equipment and systems needed to make this transition possible. This includes gas turbines, wind turbines, and grid solutions that help manage the flow of electricity. Now let's talk about why this matters from an investment perspective. 𝗗𝗓𝗏𝗧 is not a speculative play. It is a company with real revenue, real customers, and global reach. That provides a different type of opportunity. While Oklo offers high-risk, high-reward potential, and Bloom offers growth tied to emerging trends, 𝗗𝗓𝗏𝗧 offers exposure to the energy transition at scale. This is important for balance, because large-scale infrastructure companies often benefit from long-term contracts, government spending, and steady demand. And that can create more predictable cash flows. Now let's look at the growth drivers. First, global investment in energy infrastructure. Governments and private companies are pouring capital into upgrading power systems. This includes renewable energy projects, grid modernization, and energy storage. 𝗗𝗓𝗏𝗧 is directly involved in many of these initiatives. Second, the expansion of renewable energy. Wind power remains a key component of the energy transition. 𝗗𝗓𝗏𝗧's wind business positions it to benefit as capacity continues to grow. Third, grid modernization. As more renewable energy comes online, managing the grid becomes more complex. Advanced grid solutions are required to balance supply and demand. This is a critical area of focus for 𝗗𝗓𝗏𝗧. Now let's talk about financial potential. Analysts see meaningful upside in the stock as the company continues to execute on its strategy. The broader opportunity across these green energy plays points to potential gains that could approach 65%. For 𝗗𝗓𝗏𝗧, that upside is tied to improving margins, strong order backlogs, and increasing demand for its products and services. Backlog is an important metric here. It represents future revenue that has already been contracted but not yet delivered. A strong backlog provides visibility into future performance. And as 𝗗𝗓𝗏𝗧 continues to secure new projects, that backlog can grow. This creates a pipeline of revenue that supports long-term growth. Now let's address the risks. Large-scale infrastructure projects can be complex, execution matters, costs need to be managed, and global economic conditions can impact investment cycles. But again, these risks are balanced by the scale and importance of the company's role. 𝗗𝗓𝗏𝗧 is not dependent on a single technology or market. It is diversified across multiple segments of the energy industry. That diversification can provide resilience. Now let's bring everything together. You have three companies, each addressing a different layer of the energy transition. Oklo is focused on next-generation nuclear, providing reliable baseload power for the future. Bloom Energy is delivering distributed on-demand power solutions that address immediate reliability challenges. 𝗗𝗓𝗏𝗧 is building and upgrading the infrastructure that connects everything together. This is not random. This is a system, and when you invest across different layers of a system, you are not just betting on one outcome. You are positioning yourself for a broader trend. This is how sophisticated investors think. They look at the entire ecosystem and identify key points of value. Now let's talk about why billionaires are quietly loading into these types of stocks. It comes down to timing. The energy transition is still in its early stages. Yes, renewable energy has grown significantly, but the full transformation of the global energy system is far from complete. That means there is still a long runway for growth. At the same time, many of these companies are not yet fully priced for that future. There is still skepticism. There are still uncertainties. And that creates opportunity. Because by the time everything is certain, the biggest gains are usually gone. Now think about the next 10 years. AI continues to expand. Electric vehicles become more widespread. Industries shift toward electrification. Energy demand rises. Infrastructure needs to be upgraded. New technologies are deployed. All of these trends point in the same direction. More electricity, more reliability, more investment in energy systems. And the companies we just discussed are positioned right in the middle of that shift. Now here is the key question. Which type of opportunity fits your investment style? Do you prefer high upside, early stage innovation like 𝗗𝗟𝗧? Do you prefer scalable real-world deployment like Bloom Energy? Or do you prefer large-scale infrastructure exposure like 𝗣𝗟𝗏𝗧? There is no single correct answer. The important thing is understanding the role each company plays and how it fits into your broader strategy. Because investing is not just about picking stocks. It is about building a portfolio that aligns with your goals and your risk tolerance. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. Which of these three companies do you believe has the strongest long-term advantage in the energy transition, and which one would you choose to hold for the next decade? Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.